Welcome to Running Greenleaf, where we get into the nitty-gritty of operating real estate. Today we have a new deal that new deals we're excited about. We've been on this push to go find as much vacant single-story office that we like, that we find we can do something with. So we found another deal that we're really excited about. It is up in Milton, Georgia, and it's 170,000 square feet of single-story beauty.
Dave, I just got to stop. We're really, really excited about a new deal.
It's been a while.
It's been a tough market. It's been 4 or 5 months since we've really seen anything that's worthwhile. The last deal like this that we saw, we put it under contract, I believe it was like last July, June. It's almost been a year. And we closed this September. That was the Forum Flex deal in Peachtree Corners. And this deal really mirrors it. It's very similar to it. And we're getting it at an even lower basis.
Yeah. It has been quite a challenge to go find these opportunities. We've been talking a lot about them, but actually finding one that we can execute on has been really hard. So we're here today. We have a new one, 170,000 square feet. We're getting it for $64 a square foot.
$64 a square foot. So compared to the last one we did was $85 a square foot. So we're very excited about it.
So the difference kind of looking at those is that one for $85 a square foot Forum is about half occupied.
Right. Better
and
occupancy.
it had some good tenants in there, publicly traded tenants. So that added a little bit of value there to the deal. And yeah, and because it was better occupied, we had to put less money in. We put $25, $30 a square foot that we're putting into that one. This one's going to require closer to $50 a square foot because of the occupancy. Because there's just more vacant space.
Yep.
Right. So that was a Forum deal for $85. This one for $64 a square foot. We've got 130,000 square feet that we would have to lease up. It is all single story. It's 3 buildings, and it has great access to 2 main roads that you can get in and out of it very easily. So we like all those things about the deal. Some other key points, we're like, okay, why this deal? Why are we excited about this single story office and opportunity? One of the buildings is currently, or was basically, in the format of really an open warehouse. It was used for assembly, essentially. Not real manufacturing, but more assembly that was there. So we already have a lot of that kind of opening up the space work done. So that's positive. We also have very attractive zoning.
Yeah, so the zoning code is T6, which in looking at other buildings like this, we've seen very wide range of zoning from office institutional, basically saying that all you can do is office here, to industrial use, which is pretty heavy industrial, to this is
like real industrial.
It's a real industrial.
We don't do real like power plants or recycling centers. We're not doing that type of stuff with our industrial flex use. So that's kind of like on the far end of the spectrum, and pure offices on the other end. Right. And we need this flexible in the middle.
And this is like really perfectly in the middle. You know, it allows us to do mini storage. It allows us to do brew pubs and restaurants. It allows us to do medical office. It allows us to do lawn care and other specialty providers for the
retail, live, work. So it has automotive. Like there's a lot of functionality with this zoning that we can use it for. So for us, that's perfect. And that means typically we get a lot of questions on what type of tenant is going to go in here. It's like, well, the zoning really dictates that, unless some of our other projects where we've had to try and redo the zoning and get things approved to get a special use permit. Here we have a ton of opportunities that we can just move tenants into right away.
Right. So. And that combined with really the city of Milton, city plan of it being 98% residential, basically a moat of houses between us and other neighboring cities and any other neighboring buildings that allows us to be really in a unique position of this is really the only office building like this in this area that drives higher demand.
Yeah, we met with the city, we've talked with them, and they made it pretty clear that they're not looking to add in big mixed-use facilities. They're not looking to really add in apartments or more commercial or any of that kind of stuff. So we really see pretty significant barriers to entry to get into this area. And this asset is there. It has the right zoning. So for us, it makes it an attractive acquisition. Right? We think about, like, what are we going to do with this space? Right? Like, that's ultimately how are we going to take something that's vacant and what are we going to do to turn this into a financially productive investment? And our game plan with these is to cater to that type of a user that we just outlined. They really need to be smaller, more ready to go spaces. And we're kind of coining the term innovation unit, where someone can come in and they can be very creative and entrepreneurial about what they're going to use that space for, and get in there quickly. And even in the quick terms, it's not always as quick as you want it to be. So our initial plan is to go divide these up to 3,000 to 5,000 square foot suites. We really use the layout of the existing building where the main columns are, and that's where we're putting our fire rated walls to divide it up. And then we will add additional entrances on the outside so you can get in and out of each individual space. Again, it's a building where there's no common area. There's not any common area that we're going to be maintaining. Everyone will have a direct entrance exterior into their unit. That makes it just more efficient to operate. Right?
Yeah, and we'll save the bathrooms, we'll save the kitchens as much as we can where they are, and we'll use those plumbing stacks, and we'll really design around the existing building structure to maximize, really the spend of our dollars.
Yeah. We look at the current leases. The current lease is around $23 a square foot gross, which is a good lease rate. We are really just aiming to either get that amount or convert to 13 to 14 triple net, which, depending on how you slice it up, they're pretty similar in financial returns, except it's quite a bit easier to operate the net lease, where the tenant is paying their utilities and covering their costs, and we just charge less in rent. That's an easier structure to operate in. Requires us to divide things out by suite to do that. However, we're prepared to do that. That's in our capital stack. The bulk of our spend, when we look at us going in and doing this project, is really the division of the space and then tenant improvements. That's 90% of our capital that we plan to use is doing that.
Yeah, so we're buying the building for just under $11 million. We're spending about $5.5 million on improving the property, $5 million of which is going to tenant improvements and leasing commissions. The other $500,000 is going to basically site improvements. And then we have about $2 million reserved for really the burn while we hold the property, for operating costs and the cost of servicing the loan, et cetera, until it's fully occupied. And we've budgeted 24 months in that window to basically go from acquisition to tenants paying rent. The key word is tenants paying rent.
Right. Yeah, not just leases.
Right.
Yeah, we can lease stuff very quickly. And right now, across our organization, we've been actively signing leases every week. And that's very exciting. However, once you sign that lease, you still have a period of 2 to 3 months where you need to do some upfit for that tenant. That tenant needs to get their certificate of occupancy and business license to be in the space. And then currently what we're seeing is about anywhere from half of a month to a full month of free rent for each year of lease that is signed. So if someone signs a 5-year lease, they're typically going to get 3 to 5 free months of rent, or rent abatement that we're calling in that period, which means we now went from, we signed a lease, we spent 2 to 3 months on kind of getting the space ready, and then we have 3 to 5 months of free rent. So all of a sudden, that pushes things out 8 months, and it becomes a longer period of time. So our biggest risk in this deal is really that time to paying rent, not time to lease, time to paying rent. So we've got to move quickly. The faster we go, the better the investment returns are. The faster we're able to get in there, get everything permitted, and get the work started so that we can take a lease and get it to paying, the better off we'll be.
And some of the things that we're doing differently on this project is we've already met with the city. We've already validated the zoning. We're starting to draw the property and kind of design these units in advance of closing, so that when we close, we hit the ground running. These are all things that we've learned throughout other properties that we've bought to help speed up our timeline.
Yeah, and in other deals, typically we've bought a space and we're like, okay, how do we get this tenant out? Because they're a tenant paying $3 or $4 a square foot, and we can get them to 12. But as we move a tenant out, then we start the permit, the drawing, and the moving forward process. This one, we can, since we have so much vacant, we can really start that before we close and get that stuff going. We're already engaged with our architect to draw the exteriors and get the elevations going. So then we'll be able to really take this stuff and submit it and work on getting our how are we dividing it up from day one and get going on it quicker. So all these things we're doing are trying to really just increase the speed at which we can operate, so ultimately we get to that paying rent faster.
Exactly.
Our financial goals, once we are able to do that, and again, we're targeting 2 years, our financial goal is really to get to a point where we're at about a 9% cash on cash position. That is our goal, and we think we can get there in the 2-year time frame by occupying this and executing our capital plan. Our debt stack coming in, we have a loan from a community bank that's really who we've been doing all of our loans with since we started, right? That's our focus. And they came in around 65% leverage at a 7% interest rate. So it's a good loan.
It's a great
especially
loan for this market.
Great for this market. And we'll use that through construction. And once we're stabilized, we'll have good debt coverage. We'll be paying off that loan. And it's a 5-year loan. So our investment horizon goes out to 5 years, where at that point we will look at, okay, are we going to do a refinance? Or are we going to exit the deal? What is the best capital decision to make at that point in time?
Exactly. Yeah, and this loan is fixed for the next 5 years. So we have it in a good position that we can actually evaluate what our interest rate's going to be and really what that debt payment's going to be on a month-to-month basis. If for some reason interest rates come down and we're in a more stable position of the property, we'll look to refinance that sooner and get a lower rate.
Yeah. Cool. All right, so that's the recap of what we like about the Hub deal. We're very excited about getting this one going and doing the project and doing the leasing. That stuff is always exciting to see it progressing. Our target is to close in the middle of August, and we will be having another investor Q&A coming up in July that we can help answer any other questions on the deal as well. So, cool. Thanks for watching. Let us know if you have any questions.